Welcome to another Real Estate Talk Show, featuring highlights of the best interviews from our national real estate radio show. Here's another property expert.
Well, the housing finance approval figures were released during the week, and maybe we should actually be calling them the non-finance approval figures because, there's a bit of evidence that there's a gloomy picture beginning to emerge that's suggesting that maybe the RBA got it wrong with their last rate increase. Louis Christopher from SQM Research is suggesting that in the next few months, certainly between now and Christmas, we could see a reduction in the prime rate. Good morning, Louis.
Good morning, Kevin.
That's a bold statement to make. Is that based purely on those figures?
Look, largely yes. Of course, there are other figures suggesting the economy is slowing, such as retail sales as well. But we must remember that the RBA has been quite clear with regard to their target on the housing market. For a number of quarterly bulletins they've been releasing now, including public statements, they've been expressing concern that we might go into a housing bubble. So I believe that they've been setting monetary policy in terms of lifting interest rates because of that fear of a potential housing bubble. Now, it's fairly clear now that the market is slowing. I think we're seeing this on a number of measurements now. Certainly a number of analysts, not just myself, are suggesting that we're going to see a slowdown in the housing market second half of this year. And I think it's already happening as we speak. So with that in mind, and that in mind in the sense that we know the RBA has been focusing on housing, there is a chance that they may cut rates sometime later in this year, particularly if the global economy still looks quite soft. And, of course, we're aware of what's been going on in Europe. I don't think too many people have missed that. And if we were to see a double-dip recession in Europe, then you would certainly see the RBA cut interest rates.
Yeah, so many conflicting reports, aren't there? I mean, during the week we also heard that that in the States they're totally ruling out now a double-dip recession, and and we also saw some very good employment figures. I know the ones in the States are a bit rubbery, but certainly the ones out of Australia were not looking too bad.
The employment figures were quite good, but just remember that's a lagging indicator. It's taken up to the point in time just before Europe really hit the skids. And it's also up to the point in time. Remember, the Reserve Bank of Australia lifted rates in May. So we haven't seen the true impact of those most recent interest rate rises hit the economy yet. And the RBA has been very clear about this, and many other economists have been as well, is that there is a lag effect in lifting interest rates and indeed cutting them, and then having a natural impact upon the economy.
We're seeing a lot of support coming forward for the government stimulus efforts over the last year or so, and how that's certainly propped up our economy. Interesting to note that in New South Wales, the state government there increasing their stimulus by offering to but they will drop stamp duty on off-the-plan purchases, anything up to $600,000. Is that something that you think should be happening across all states?
No, I don't think it's necessary across all states. What the state government's trying to achieve here is increase the supply of new dwellings or increase the supply of total dwellings into the New South Wales market. It is fairly clear that in this state that there is an issue over a housing shortage. I do believe there is a housing shortage.
When you say this, you're talking about New South Wales?
You're talking about this in New South Wales, That's right.
Yep.
That to say that that's occurring everywhere, I would disagree with that. So overall, I'm in agreement with the New South Wales government in trying to encourage new development, and no doubt by cutting stamp duty or eliminating stamp duty on off-the-plan developments for properties under $600,000. That will certainly encourage demand, and that will enable the developers to get the pre-sales that they need to go and build. And we do need to see new building occur in New South Wales.
No doubt of that. In fact, we need it in certainly in southeast Queensland as well. The thing that worries me about that is that they're offering stimulus on what would seem to me to be a reasonably risky area of investment. That's off the plan. It's certainly not been one of my preferred options.
No, and Kevin, the reality is that over time, more people have lost money on off-the-plan developments than what they have made money on. So it is a bit of a risky development. Certainly investors really do need to do their research, their homework, before they take up these off-the-plan developments. And one of the main things I would recommend anyone looking at off-the-plan developments is they get an independent valuer to come in and get a proper valuation done on that off-the-plan dwelling.
Yeah, if you want to know some of the research that you should do on it, I'd suggest you have a look at Louis' website, sqmresearch.com.au. I don't know if you've got any samples available of some of the research that you do on particular developments, Louis, on the site?
Oh, yes, no, we do. That we've got some reports there. We actually do research on individual developments, quite detailed. We put in demographic data. We look at the comparable sales in the surrounding area. We look at what the likely rate of return could be for an investor for that particular development.
Louis Christopher, thanks for your time today. Louis Christopher from sqmresearch.com.au.